ऑफिस अभी रुकना।
Everybody,
ऑफिस
ready? Good evening, everybody. Honorable President of the Institute of Chartered Accountants of India, C.A. Atulji, Dr. Rajiv Kumar, Vice Chairman of Niti Aayog, who will shortly join, Sri Naresh Salecha ji, Additional Member Revenue, Railway Board, Sri Ian, Chair of CIPFS Standards, Mr. Henning, Technical Manager, ICAI. Welcome to this webinar, which has been arranged primarily to discuss accrual accounting and moving towards more transparency and empowerment. Our Vice Chairman of Niti Aayog will also discuss about Atmanirbhar Bharat and fostering, empowering rural economy. Let me give background of this webinar. This webinar has been organized primarily to discuss the benefits of accrual accounting, particularly in the government sector, and the Accounting Research Foundation, which is a company formed under the Companies Act in the year 1999, has organized this webinar. ARF is focused on fostering research and facilitating research in the area of accounting, auditing, capital markets, fiscal policies, and such other subjects which are related to the profession of accountancy. And ARF, I will call Accounting Research Foundation briefly as ARF. ARF has been at the forefront in helping government and even state governments to switch over and transition to accrual system of accounting. And today we have experts to discuss their experience when transition was made from cash system to the accrual system of accounting as to what are the benefits. In India, the government is basically following cash system of accounting, and the GASAB, that is Government Accounting Standards Advisory Board, was constituted by the Comptroller and Auditor General of India, particularly to mandate accounting standards to the central and state governments. This GASAB is also actively working to ensure that even all governments, all government bodies switch over to the accrual system of accounting. The viewers know it very well that under cash system of accounting, government would not know what are its assets and liabilities, and it would not be aware of the full picture of the economy unless and until they follow accrual system of accounting. At Indian Railways, ARF helped Indian Railways in transitioning to the double entry system of accounting, and we have Sri Naresh Salechaji to discuss and inform us about what benefits Indian Railways got after transitioning to double entry system of accounting. We have Ian who will discuss the position of double entry system of accounting in UK, and Henning will discuss what is the role of PAOs in double entry accounting system. So with this, we will discuss at length this subject today at this webinar. And fortunately, we have government officers also available here to discuss about double entry accounting system. I have immense pleasure in welcoming all the participants and viewers to this webinar, and I'm sure this webinar will add a lot of value to the knowledge and understanding of the professionals on double entry accounting system in government sector. Thank you so much, and may I now request our president to take over.
Thank you, Vice President, sir, for introductory remarks. And at the outset, I welcome the Honorable Naresh Salecha ji, the additional member revenue from the Ministry of Railways. We very shortly we will be joining. Mr. Rajiv Kumar will be joining with us, who is the Vice Chairman of the Niti Aayog. Mr. Ian from the Chair IPSAS B, that is the board for the accounting standard for local bodies and government sector. Mr. Henning from Institute of Chartered Accountant, England and Wales, and all my viewers. A very good evening to all of you, and we welcome all of you in this 2 hours special workshop being organized on the importance of the accrual accounting and the way forward. Friends, you are aware that when we talk about the accrual accounting, each one of us is following in the commercial set of enterprises, the business organizations. But when we talk about the government sector, whether it may be the tier 1, that is the budgeting process, the entire the national level government, or it may be the state level, or the tier 3, that is the urban local bodies and the rural bodies. There are a lot of, I will say, the endeavors which are required to implement the accrual accounting. Now, when we are talking about the accrual accounting, each one of us is aware that the benefits of the accrual accountings are immense. Apart from the transparent reporting and the disclosure norms being followed, there are the benefits like augmenting the revenue, because the moment you have the I welcome Dr. Rajiv Kumar ji, who joined us. So there will be the immense benefit in terms of the augmenting revenue for the local bodies or for the government sector, because you are aware about the monetization of the asset by using the accrual accounting. At the same time, you can use this accrual accounting for the various decision-making purpose, for the zero-based budgeting, for the better financial management, because you are aware that from where the money will come and from where the money has to go. There will be a lot of new initiative like a PPP models. Apart from the highways, you can introduce into the various activities of the particular organization. You can also look for a cost control and then prioritization of your expenses by using the ABC analysis. So the ICAI understand this importance of the accrual accounting, and since more than 20 years, the ICAI championed this aspect of implementation of accrual accounting. So we started with the urban local bodies. The first project which was there by the ICAI was the Municipal Corporation of Delhi, and then we moved to the large number of urban local bodies, the Department of Post, and the mega project which we completed through the ICAI is the Indian Railway. Thanks to Honorable Naresh Salecha ji, who was the mentor of that project, and now today he's the additional member of revenue for the Ministry of Railway, and today he's present among all of us. Friends, apart from that, when we are talking about the ICAI initiative for the adoption of the accrual accounting, there are the 3 limbs which are working in the ICAI. The first limbs is that developing the standards for the adoption of the accrual accounting in the urban local bodies. So we have the Committee for Accounting Standard for Local Bodies, which is practically taking the support from the IPSAS B, whose chair is with us today, and we are developing a lot of standards which are as per the local need. Then we have a committee called as Government Accounting and Public Finance, which is actually disseminating the benefit of the accrual accounting. And finally, we have the Accounting Research Foundation, which is doing an implementation job for the accrual accounting. And I am aware that large number of chartered accountants are taking a very active participation in this particular implementation, dissemination, as well as this standard setting process. Friends, you are also aware that the CAG also formed a committee called GASAB, which is also working on the accounting standard for the local bodies as well as for the government sector. Even I just wish to share with you that the Article 280, that is the Finance Commission of our country, has also earmarked the certain performance grant for the urban local bodies if they will adopt. So there are, I will say, there is a complete ecosystem which is in place, and there are the huge efforts put in by the government, including I was just a few days back only, Honorable Dr. Rajiv Kumar ji called me that Atul, we have to see that the accrual accounting should getting the that kind of an initiative from the ICAI, and immediately we requested sir to be we will organize a workshop, and you have to be the chief guest of that. And I'm happy to intimate you that the Honorable Vice Chairman of the Niti Aayog is with us today to grace this occasion, and he will be addressing as a address to all of you as a chief guest. Friends, there are the as I mentioned you, there are the tremendous benefits available to the economy, and as rightly mentioned by Honorable Prime Minister of our country about the Atmanirbhar Bharat, and as well as the target of the 5 trillion economy, which is scheduled by 2024. I am aware that it may it may delayed maybe for a few months or a year because of the corona pandemic, but our commitment towards that, both of the projects, that whether it is Atmanirbhar Bharat or a 5 trillion economy, is completely committed from the ICAI. And since this will play a very, very important role, because the rural entrepreneurship, the rural bodies, as well as the urban local bodies, apart from the government, various government organizations, they have to play a very important role by adopting, and but how they can do that, they can do by adopting the accrual accounting. And I'm aware that our large number of our professional colleagues are the expert of this particular subject. They are providing the value added services, may it be the implementation of accrual accounting, or even on the project of a smart city, on the bonds being issued by the various urban local bodies. And even ICAI developed a booklet, a research paper, which is called the Augmenting Revenue for Urban Local Bodies to make it them self-sufficient. So there are number of research projects are being undertaken by ICAI, number of implementation projects are being taken by ICAI with the support of our professional colleagues, the chartered accountants. And I believe that this kind of a program will pave the new horizon, will create a new kind of a dimension for our professional colleagues. And with the presence of Dr. Rajiv Kumar and Naresh Salecha ji and international personalities like Ian, who is the chairman of the IPSAS board of IFAC, and the Henning, who are having the practical experience of implementing the accrual accounting in one or the other sector, and specifically the UK budget. So I am aware that the UK in the past passed a bill in the parliament to adopt the accrual accounting even in the budgeting process, and even looking forward to appoint a CFO, designating a post of the CFO in all the public sector as well. So friends, there are, I will say, the numerous challenges as well as opportunity for all of us, and how we should see that how this adoption of the accrual accounting and making this urban local bodies and other sectors more viable and more sufficiently, I will say, viable. It is our duty to serve the country, and I believe that this kind of a workshop will remain very useful. Friends, before I sign off and request Dr. Rajiv Kumar to address all of us, I just wish to once again introduce that Dr. Rajiv Kumar is the Vice Chairman of Niti Aayog, formerly known as Planning Commission, and you are aware that the Honorable Chairman is the Prime Minister of our country, and sir is like we are always getting a very good, I will say, the intellect, I will say, I used to say for Rajiv Kumar ji that he's not only a person of a great, I will say, horizon vision, but also a brother and a philosopher, a guide for all of us. And whenever we are requesting Dr. Rajiv Kumar ji to guide us, address us, even you must have seen that on the yoga day, on the Twitter of Rajiv Kumar ji, he is like a great meditation and yoga are the key of Dr. Rajiv Kumar ji. Whenever you will meet him, you will find him ever smiling. And we have with us Naresh Salecha ji, who was the project mentor of the railway. Entire project was being mentored under his guidance, and I used to meet him on a very often, practically on a daily basis when we completed the project of the Indian Railway. And he was always having a mantra कि अब प्रॉब्लम नहीं, अपने सॉल्यूशन की तरफ काम करेंगे. तो ऑलवेज ही वाज यूज्ड टू से कि प्रॉब्लम्स तो लाइफ में हर जगह पे हैं, लेकिन हमें जो है वो हर प्रॉब्लम का सॉल्यूशन निकाल के हमें वी हैव टू इम्प्लीमेंट द प्रोजेक्ट, सो वी हैव टू अचीव द प्रोजेक्ट. So that kind of a dedication is there. And then we have the international personalities who will be guiding us about their international experience and how they implemented the accrual accounting at the government sector, specifically at the budget level of the government of United Kingdom. So with this introduction, may I request Dr. Rajiv Kumar to address all of us as a, and we once again welcome you as the chief guest of this particular webinar. Over to Dr. Rajiv Kumar.
Thank you very much, Mr. Atul Gupta. It was a very kind introduction, and I hope I'm audible and there are no technical glitches.
Yes, sir. Yes, sir, you are audible.
The eminences and experts and accounting experts who are collected here. I must say that it is presumptuous on my part to address you, but You have to blame Mr. Atul Gupta for inviting me here because I'm just a mere economist, and we really don't know very much about the accounting standards, etc. But here I am in the midst of you, simply because I believe at the moment, and I'll explain that later, that it's time now has come to very sincerely and in a very focused manner consider the way forward in our country for the application of accrual accounting and switch over to that, and in what form and in what process, in what sequence can we do that is something that we need to discuss. And I'm hoping that this workshop, being so well timed and organized by the ICAI, will help us in that direction, because this is just the right time in the preparation of the next budget, and also the right time in the sense of following the Prime Minister's advice of converting this crisis into an opportunity. Because this is where we get the time to think about these things, to really go in depth into it. So thanks for this, and I hope you'll bear with me for the next about 19 minutes or so, because that's the time allocated for me with Mr. Gupta. So friends, let me start off by saying that we have, as you know, in our country, the law of fiscal responsibility and budget management, which is where the Parliament and all the political leadership has, in some sense, voluntarily committed itself to fiscal prudence, fiscal balance, and proper fiscal management. And our Prime Minister has shown in no uncertain terms his own commitment to fiscal prudence and to follow the fiscal norms, in the right spirit, and therefore not let the country slip into any kind of a fiscal, responsibility or I dare say into fiscal mismanagement. I think, given that commitment by the community, by the political leadership, by the society, as well as the current Prime Minister, I think it's imperative for us to make sure that we follow, we implement the FRBM in its true spirit, which is that of transparency, which is that of complete accountability, and which is therefore and also of taking into consideration all the future liabilities and assets, etc., in the country, and gradually come towards what in England, when I was studying there, we were always talking about the public sector borrowing requirement as a whole. I think we have to move towards that, which would mean the central government, the state government, and the public sector corporations, etc., which all be covered by the FRBM. And my submission to you is that at least my hypothesis at the moment is that accrual accounting will help us in that direction, and I'll elaborate on that as I go forward. Now, and that's the case that I'm trying to make, which is that the accrual accounting gives a much clearer, much more transparent, and a very straightforward, description, if you like, of the government's payables and receivables, and therefore, that helps us in maintaining, in implementing the law in its true spirit. Now, I must here at the very beginning make a distinction between financial accounting and budget accounting, and I think that's a statement which is critical, because very often, and I think quite rightly so, people will tell you that accrual accounting may not be the best for looking forward or going periods way forward into the future, because all the, let's say, a very large infrastructure project which has all the expenditure for the number of years going forward, you can't possibly put all that liability payable in the first year itself, and that's what the budgeting is about, because that will just distort all of that. I think we need to distinguish that in our mind, but then slowly but surely try and emulate New Zealand and Australia, who started this in the early 90s, to go full-blown into the accrual accounting for government and all its agencies and departments and so on. But I think it's useful to maintain that distinction as we talk about it. Now, you see, we know for a fact that both New Zealand and Australia benefited quite clearly from the adoption of accrual accounting. Their gross national liabilities fell down, declined, the debt to GDP ratio declined, in fact, started generating surpluses because of the clear understanding that the accrual accounting presented to the political and financial leadership and to the financial managers of the government. So I think that's, if evidence is required of accrual accounting's performance, those two countries, I think, provided an ample measure. Now here also, but the International Public Sector Financial Accounting Index report of 2018 tells us that 25%, which is 37 out of the 150 countries, which are members of that, have adopted accrual accounting already. 45% of them are now in the transition towards that. So that by about 2023, you expect that 65% of all the members reporting to this International Public Sector Financial Accounting Index would be on accrual accounting. So I think there's a clear trend towards that. There's a clear understanding that that's where the world should move. And the World Economic Forum, in its very recent report, talked about the fact that in the COVID situation, etc., they've advocated the countries for adopting the adoption of accrual accounting, giving strength to this trend which the International Public Sector Financial Index points towards. Now, but it still remains that 30% of the countries are on cash accounting. So it's and that includes some of the very large ones. And the OECD, has not. Most of the OECD members, I dare say, I think the majority of them still not moved away from cash accounting. The US and China are the two very large examples who still, and people can cite to them and people can point to them and say that if they can make do, then why shouldn't the others do? Now the fact is that China is now surely on the transition path to accrual accounting, and the subnational governments are now already on that. The issue was because all of us are in some sense forced to use that, and they derive the singerage advantage of that. So I think the US should not be taken as an example of the advantages of cash accounting. So short point here being that globally, internationally, there is a trend towards this, and for the question as to why we should not be adopting or going following the same trend towards accrual accounting. Coming to India, therefore, I think 15 years ago, I think the 12th Finance Commission clearly, very explicitly recommended the adoption of accrual accounting, and the successive Finance Commission have reiterated that recommendation as far as I can make out. So given that there is this, you've done that recommendation is there. The government accounting standards and advisory board to which Atulji referred to has been doing a lot of preparatory work. I think in 2006 they came up with the roadmap and transition path for accrual accounting. In 2007 they came up with an operationalization framework. It's wonderful to see Mr. Salecha there, who has already done this in the railways, to try and move to that system. So so there is clearly clearly already an understanding within the country at various different levels that this is perhaps the system to move to. And I just want to. What I discussed with Mr. Gupta was that given the global trend, given the understanding that we have in our country, what is it that is still preventing us from adopting it? And so therefore we should be I hope what the workshop should be able to do is to sort of quite clearly and candidly and specifically identify these constraints, these bottlenecks, these mindsets, if you like, or real reasons, very tangible, real reasons, which are preventing this transition, prevent cash hoarding in the government departments. because there is at the moment an incentive for the financial managers, whether it is the integrated financial department or the financial advisors or the treasury managers, to try and, as it were, hoard cash, because that's what really goes down in the book. Now that has an implication for those whose receivables are then accumulating in these government departments. And to my understanding, the government has a responsibility towards the vendors and the suppliers and the contractors to give them that assurance, that certainty that their receivables would be liquidated as soon as possible, because that also then means, especially in this current situation, it's very clear that that would infuse the much needed liquidity in the system. That will bring about greater demand, and that will set the wheels of the economy moving more rapidly than what would be otherwise. So I think government as a macroeconomic manager, in that sense, would benefit from adoption and from discouraging the cash hoarding, which I dare say, and I think this is something that I would want to be corrected if I'm wrong, that I dare say that which cash accounting encourages in some sense. And I've seen this in many cases going forward. So I think this is that for me, therefore, it's the other part of the other reason for which I want to do is that when you adopt a accrual accounting system, then you know exactly how how the two sides of your P&L account are mounting up, and therefore that makes for much better, much more timely, and much more focused policy response, to what you are doing. And I think that is what we need, because in case there is, in case that your receivables are higher, then you don't then fear greater expenditure, and you can do that, and just the reverse, which is that if you think so I think clarity that accrual accounting brings, the transparency that it brings, in the simplest manner, improves policy making and macroeconomic management. And I think to that extent, even the RBI should be insisting, the Reserve Bank of India should be insisting, because their monetary policy response depends quite critically on how the fiscal policy is behaving. If we know, for example, that the fiscal balances hide things underneath and are not putting them up forward as they should be, then monetary policy is also constrained in its own application and its behavior, because there is this significant amount of lack of clarity and uncertainty which remains. Now, going forward, there can be four approaches to this whole transition. If we begin with the first, let me just take a step back and say that some people could argue that, look, if some of the largest countries and some of the largest private sector corporations can live and can thrive with cash accounting, then where is the problem? Why shouldn't the government do it? And the example in our case in India is always given with the Parthi system that the Marwadis have followed for centuries, as it were. And that's just a chit of paper that they receive every morning, which only has cash, the sort of cash ratio, as it were. And that's supposedly there are Harvard management case studies on that as to how that's led to some of the most efficient controls, financial controls in the corporate world. Now, I know a little bit about it. I don't know enough, but I've been a part of a corporate house run by this very ingenious and the sort of very talented community. But if it is so, then the workshop should discuss that. My only understanding is that a sovereign couldn't be compared to a corporate, because as I said, a sovereign does have macroeconomic responsibilities and is not just interested in only in his narrow cash management. Because this narrow cash management, if done too well, could mean that you are going to take pro-cyclical fiscal measures and not counter-cyclical measures, which is very often what this, the government would need to do. हेलो
सर, हम आपको सुन पा रहे हैं सर.
Can you?
Yes, sir.
Sorry. So the other part is that the government can issue debt, without as much bother. I mean, it can't issue debt, unlimitedly, except of course you are the US. But I mean, it can issue debt much more than what the corporate can do, and even those corporates which manage a better debt to equity ratio, which have a reasonable gearing ratio, often grow faster than those who are only dependent on their cash situation for growth. And a cash based sort of financial management system that often leads to an unrequired conservatism, as it were, and hinders growth. So I mean, for all those reasons, I think the argument that if the corporates are doing it, why can't we do it? I'm not sure, but let's let the workshop examine it. Coming back to the four approaches, there could be one which is of course the New Zealand and the Australia, and I believe the UK approach, which is go whole hog and adopt the accrual accounting, financial accounting, including for the budget purposes. That's one. The second one could be the Japanese sort of approach, which you have where you have preparation of accrual accounting, accrual financial statements, which complement the cash-based financial statements for the budget. That's the second one. The third one would be just 1 second. That you have accrual-based financial statements for accounts and cash-based budget statements. And this is where the distinction that I made between financial accounting and the budget accounting comes in handy. And the fourth approach could be that we will stop ground up, that we'll take all the sub-national elements first. We'll go to the third level of the government, the Panchayati Raj institutions, the urban local bodies, then the state governments, and then we'll build our accrual accounting going upwards, and then come to the center, which will give us time and practice and experience, etc., for all of those. Now, I don't know the answer at this point of time. I don't know how much are we prepared. Where are how much are we? What is the kind of risk associated with that? But I would leave it to the most eminent specialists who are gathered here to deliberate on that and to tell us as to which of the four approaches we can follow, and where is our country's accounting establishment and our expertise, to be able to make this transition. My only request is that really the debate should be joined. The discussion should be there in the public domain. We need much greater awareness. This is not something that we can any longer push under the carpet, and as something too technical for everybody else. Because I think the existence of one accounting system or the other affects the vital parts of the economy and affects very vital parts of policy making today. I think to that extent, the sooner we have a full-blown, robust debate and discussion on these issues out in the pink dallies, in the webinars, in the seminar rooms of the metros and the financial capitals and the public sector agencies, etc., I think the better off we are. By the way, when I talked about the ground level, I also meant should we go to the public sector companies and get them to adopt these things, etc. I think the time has come for this, and I very much thank Mr. Atul Gupta for starting this process, taking this initiative, and I was hoping that he will do, ICAI will conduct such workshops in perhaps every state capital of the country in as short a time as possible, so that there is a movement, if you like, to discuss as to where we should go and how should we go, and the advantages and the disadvantages of a transition from cash accounting to accrual accounting. Thank you again very much for giving me this patient hearing, and I hope and I wish all the very best for the workshop. Thanks a ton, Mr. Thank you.
Thank you very much, sir, for a very thoughtful and insightful address and giving the global overview on the accrual accounting and various approaches are being shared by under your guidance, that how we have to move ahead into the one or the other approach, and ultimately the purpose for which we have all today gathered here should be achieved in a near future. Sir, your valuable address, and I believe that your insight about the accrual accounting and at the global level will be very, very useful for our members and all the participants, because ultimately when you are speaking, sir, you are speaking like we always take that you are the ultimately the thought leader in the government sector, and once you are addressing all of us and you are chairing this program, certainly it will go in deep into the thought process of the entire ecosystem of the governance of the country. Once again, sir, thank you very much for sparing your valuable time. And now we have with us, so we will request you to continue for few, maybe for like if you can spare your valuable time, sir, we'll request you. Yeah. And now we have with us Shri Naresh Salecha ji, who is the additional member revenue from the Ministry of Railway. And he was the, as I mentioned, that he was the mentor of this entire project, wherein the ICAI and the Ministry of Railway jointly worked on the project of implementing accrual accounting in the railway. And I believe that by virtue of that, there are a lot of benefits which the railway is getting from that implementation. And even we are working on a transaction level adoption of the accrual accounting in very near future. So over to Naresh Salecha ji for his address, as well as guidance to our members that what are the benefits he feel and he perceived that the railway is going is getting from the adoption of this accrual accounting. Over to Salecha sir. Sir, unmute कर लीजिए sir, unmute sir.
Good evening, all panelists. Respected Dr. Rajiv Kumar ji, Vice Chairman Niti Aayog, Mr. Atul Gupta, President ICAI, Vice President ICAI, Ian Hemming, and large number of my friends attending webinar in India as well as abroad. First of all, let me pay my thanks, sincere thanks to Mr. Atul Gupta for inviting me to this a very relevant topic and allowing me to share my thought process and my experiences, how we did a journey of accrual based financial statement of Indian Railways and what benefit we saw. And let me also place my sincere gratitude to Dr. Rajiv Kumar sir for the setting the platform and giving the perspective in which this webinar can be discussed. You gave very lucid way what are the government policies, what are Honorable Minister's vision about the thing, what are the RBI is looking, what is the Niti Aayog is looking for, what are the various stages in which international experience of various countries, maybe Australia, maybe New Zealand, maybe Japan, maybe America, they have gone into what could be the various types and what can be the various ways where it can be, whether it can be only started with the ULB, urban local bodies, or it can be transmitted to the state government or central altogether. I would like to share. I mean, we also started a journey like this. We were also debating, can be a central specific approach, or it can be decentralized approach, or it can be unity specific approach, how we started a journey. Friends, I have made a small presentation. Seems like my time allotted is about 30 to 40 minutes. I'll start my journey, and during the journey, all these issues I would like to address, and what was the outcome of the journey, what is the current status, and what are the future approach what we are going to see. Let me also share, when we were doing this approach, Mr. Atul Gupta, the present president, was absolutely part and parcel of the team. We, in fact, like when we started the process in 2015, it was a complete partnership between Indian Railway and ICAI ARF, and we set the thing started as a pilot project, which launched to the several units and finally implemented in Indian Railway. And the first time for Government of India, any ministry, in addition to cash-based accounting, we launched the accrual-based finance statement for 2 years. So if you, I'll just take you through my journey through a presentation.
Yes, sir, we can see the presentation.
Yeah. For friends who are not very familiar with the railway, I'll just give a small background of the what about Indian Railway and what is the role of Indian Railway. Indian Railway is basically in a carrier both for the freight as well as passengers. As for our projection for 2020-21, we are the fourth largest system in the world. We will be carrying 1,265 billion of tons of traffic. We move 8,792 million of passenger traffic. Daily, we carry almost 2.3 million of passengers every day. We run trains, 13,000 passenger trains and 8,000 goods trains on an average every day. A large number of stations, 7,300 stations. We have got active 1.2 million employees. We are one of the largest employer. Our earning is about 2.26 lakh crore. In terms of USD, is more than 30,000 millions. And annual expenditure in terms of 2.19 lakhs crores. In terms of USD, is about 29,200 million. And our capex size is about 1,61,000 crore. In USD, is about 467 million. Dr. Rajiv Kumar did mention about various aspects about how we are going to meet our capex requirement of various sectors, and it was indeed one of the reasons why, which led to this whole concept and whole project. Basically, we bulk commodities. We are the largest carrier. 63% of the Indian Railway carry the coal. 86% of entire fertilizer is moved by Indian Railway. 63% of iron ore, 35% of cement moved by Indian Railway, 15% of fuel and 14% of food grain, and so many other commodities. Now I'll take you to the accounting reform. Why we felt the need for accounting reform? We are more than 150 years old organization. Our accounting was very robust, is very robust, cash-based accounting. We are all, my large number of chartered accountant friends who are listening to me, I will not go in detail what is the difference between cash-based accounting and accrual-based accounting. We are aware of the plus, minus, limitations and others, but the cash accounting as the government prescribes is already there. But we felt need to move towards accounting reforms in a way which will give the complete and realistic current information on managerial and strategic decisions, which give the current information and also lead to the right decisions. We felt the right accounting will lead to the right costing and it will lead to the right outcomes. Also, it will give the performance need to responsive and reliable costing framework, because once you've got a accrual-based accounting, it can lead to the marginal costing or activity-based costing. And it can also help in meeting the funding challenges. In the slide, you can see we have given the projection, the requirement of the funds and utilization of various sources of the fund, how we have been meeting over last many decades. Mainly our capital requirement was being met either from gross budgetary supported, that is from Ministry of Finance support, Government of India support, or internal resource generation. What we need surplus after meeting our working expenses. Basically, we earn, as in my previous slide I mentioned, from operation from the carrying freight or passengers. But over the period of time, our internal resource generation capacity and our gross budgetary support from the government of India was coming down. We felt need to go to the market. We created body, Indian Railway Finance Corporation, and through that body, we got aggressive market borrowing. This year's our target is 56,000 crore, and over the period of time, you see from the slide, it's evident we were going to the market quite regularly, and it required our investors, stakeholders required a transparent system where they can understand our figures. So accounting reform would help Indian Railway. Basically, ultimate aim was to make right decision making, which can make it financial self-sustainable. Friends, at this stage, I would also like to share with you, the Government of India want to bring down the logistic cost. Dr. Rajiv Kumar mentioned about the various aspects, which also includes, and the topic was about Atmanirbhar. It's very important for our country to bring down the logistic cost to be competitive. Supposing my logistic cost of country is 14%, and any developed country's logistic cost is about 8 to 9%. I have to see the way where it has to come down. And of course, Indian Railway can play a major role, because like if we carry 1,265 million ton in a year, if I can bring down the logistic cost by even 2%, 3%, it's going to tremendous benefit to the country, to organization, and to the country per se. Now, when we conceive the accounting reform, this whole project, in addition to accrual accounting, we also perceived about next linkages. We saw what can be the forward linkages to this project was the performance costing and also to the outcome budgeting. The rollout was of accrual accounting on all Indian Railway basis. Dr. Rajiv Kumar just mentioned what should have been the format, and left the panelists to discuss whether it can be on a basis of ULB or center or state, or it can be cash plus accrual. It can be hybrid, or it can be can go to next level. It can be index basis, IPSAS basis, something like that. So what we thought, we will start with the unit level, go to the certain larger chunk, and then roll out the Indian Railways. Then it was the preparation of accrual-based financial statement in addition to existing cash-based financial statements. Friends, we are governed by the Constitution of India, and Article 150, the President prescribes the form of the accounts where like both center and states of India shall maintain our accounts on advice of Comptroller and Auditor General of India, that is CAG. CAG prescribed the cash-based accounting for all, even as on date, for both central and states. So we have decided we are continuing. In fact, like as Government of India, Ministry of Railways is part and parcel of the Government of India, we are maintaining cash-based accounts. In addition to that, we started this project for rolling out accrual-based financial statement. We also launched a performance costing study system and development upgraded costing system. We do have very robust costing system, but it was a part and parcel, and we started with the upgraded costing system, which can help us measure in cost, revenue, and profitability of each activity, line of business and line of service properly, which could lead finally to outcome budgeting. We started pilot project on outcome budgeting, one of particular railway, linking finally to outlay. Every year we get a certain amount. We plan for a certain expenditure on a revenue side as well as on the capital side. We thought we can link to the particular output and outcome and see whether what desired input we gave in terms of the financials, whether it led to the exact output and desirable outcomes or no, and reach to the benefits, or it can be required some course correction. In that respect, this project was there. Finally, it was subsumed in the outcome budget of the Ministry of Finance. Ministry of Finance has laid down for all the ministries. We are following the same. Friends, our journey started in 2015 when Mr. Accrual Gupta came from the Institute of Chartered Accountant, ARF. He was nominated as head of from their side. I was nominated from Ministry of Railway to head this project. And we started the pilot project in Ajmer. It's a division. a fairly medium-sized division unit. We implemented the project in Ajmer division for various activities, and complete project was started. Then we moved to the Northwestern Railway, which consists of several divisions, from say like one unit to the larger units. It's a combination of units. And finally, we also covered the costing. In 2016, we covered the pilot study in RCF Rail Coach Factory, Kapurthala. 2017, we also associated Institute of Cost Accountant, ICAI, MARF, that is Management Accounting Research Foundation. And finally, in 2017, it was rolling out the accrual accounting of for Indian Railway completely as such. And now we are talking in 2020, we are in process of moving towards transaction-based accrual accounting. Friends, right now, in fact, as I mentioned to you, we are maintaining cash-based accounting. In addition to cash-based accounting, we decided to go for hybrid. That is, instead of completely moving, what we are doing is a hybrid grafting method. In my next subsequent slides, I shall cover how we are doing and what is the process and what are the benefits. Now, as for the benefits of accrual accounting concern, what we thought and what actually we derived are, we are able to better assess the fund flow to ascertain the Indian Railway ability to meet short-term and long-term commitment and fund requirement of thereof. Just in my first or second slide, I mentioned my capital requirement. Just to assess my capital requirement in the next 5 years, we have assessed is about 12.67 lakhs crore or more for various infrastructure. Now, when I have to go to the market, and we have to also see what are going to liabilities and how we are going to meet the liabilities, what were going to be debt service obligation, how that service obligation is going to be generated. All these factors are required to be taken into consideration. There, like my accrual accounting really gives into handy. In my cash-based accounting, typically only when receivers or payables do comes, then only it is factored into. So whenever earlier also, see, we were raising the amount, we were borrowing the money through RFC, and we were creating the assets, and we were incurring capex, but it was taken into account on cash, but still on this thing, where as and when it is cash is payable or so. When first time we drafted, complete picture of our liability came in a forefront. Then it assisted in utilizing resources in a very, very efficient manner. You know what exactly you can use your asset. It also provides the information about capital works in progress, CWIP, contingent assets and liability. In my subsequent live, I'll exactly give empirical data and difference between both the sets of systems, cash-based and accrual-based, and we can understand the figures. But just to share with you, in my existing system, my CWIP is, of course, whenever I pay, it is converted and is linked to the FAR, fixed asset register, but I don't differentiate. I immediately book to my FAR. When I got a concept of my accrual-based financial statement, I do maintain separate CWIP for various activities. So at any given moment, I know when the assets is due for use, when I can really convert into FAR, technically speaking, according to standards, I just put to the FAR, otherwise I keep on showing to my CWIP. And also enable the probably readability of accounts to any stakeholders who is not very familiar to my systems, to my jargons on commercial concerns, enable informed decision making and support costings. We created an in-house body. Of course, ICAI ARF under a mentorship of Mr. Atul Gupta was constituted. We created a mission mode, since like we wanted to make it through in a time-bound manner. I was told that such transition takes normally 7 to 8 years in a global perspective. Experiences, a lot of seminar. In fact, like IPSAS was also directly, indirectly involved by ICAI ARF during various seminars. But we created. I was a mission director there. We also had a chief project manager and now chief administrative officer in large railways. We create 5 northern 5 units were created in various regions deputy chief project managers, and at various railway units, accounting reform cells were created and senior officers were placed there. We set up what are our goals and what are our missions. We first decided to prepare opening balance sheet on 1st April 2015. That was our first objective, and then develop the accrual based financial statement for the year 15-16 and 16-17 by March 2019. Friend, it looks very simple. I mean, all chartered account, probably youngster may be wondering what is the big deal about this. I mean, anybody can draw within few hours or maybe a few days to do it. But the sheer amount of the massive types of, when I gave my first slide, size of Indian Railway, just to give you a capture, we have to capture the assets of 70 lakh assets, and to value and to create and place in various types of fixed assets register according to our accounting policy, which based on our accrual based financial statement can be finalized. And we also had to lay down the accrual, this accounting policy. This was the massive and very, very mammoth task. And then finally, accrual based financial statement to be set accounts in addition to existing based financial statement, which are prepared as per the government mandate as per the GFR Rule 17. This led to coverage of the entire Indian Railway. Now, friends, we have got 17 zonal railway. Then it was 8 production units producing various rolling stock, locomotive, coaches, and various other things. It was 68 administrative units, what we call divisions, 46 workshops, and various other allied offices like Core, COFMO, RDSO, etc. For this, we organized several trainings and webinars. We are having webinar today, but we introduced this concept way back in 5 years or 4 years back. Several webinars were created, and also several workshops were done to have the training and also share the thought process and have the crowdsourcing of the ideas. For accounting policies, we created 2 expert groups. From railways, there were 5 members committee, and from institute side, Mr. Accrual Gupta, along with Mr. Amarjit Chopra, past president institute, and NACAS, now called NAFRA, the CA MP Vijay Kumar, member Central Council, still is there. Mr. Sanjay Vasudeva, ex-members, and Mr. Arjinder Singh, he was there. In addition to this, special chairman committee on accounting standard for local body and technical director advisor ICAI were also there. Of course, the international consultant EFSAS and others were also being consulted from time to time. Now, coming to the challenges, what are the challenges we faced? We had a lot of challenges. It was not simple task for moving this journey from cash based to accrual based. First thing, to large number of assets. How do you classify assets? How do you segregate assets? How do you assemble assets? We had to spend a lot of time to understand how do you segregate. Not this thing earlier, we were not having the assets. We had a very robust system of asset based. But according to our requirement for the accrual based to lead to the accrual based accounting, we decided we'll have 18 clusters according to this thing, which can be a sustainable basis and which can lead to the further costing also. So basically, we decided it will lead to the first land, various types of buildings, roads, railway, tracks, furniture, fixtures, vehicles, office equipment, computers, plant machinery equipment, signal and telecom, electrical equipment, capital works in progress, medical, overhead assets, rolling stock, intangible. Now these 18 were also bifurcated. Say like rolling stock and track may have 1/3, more than 1/3 of maybe half of the entire asset size. Now rolling stock was further divided into locomotives separately, in a wagon separately, coaches separately. Similarly, track was divided separately in the, at that time there was a huge debate whether it can be component accounting or composite accounting. For friends, like normally when the component accounting means like you got a separate life, useful life, separate costing, and which can be segregated. you should follow the component accounting. But it was very difficult for railways because like track was laid at different time. I mean, track basically consists of track, sleeper, fastening, or ballast. Now, how do you derive the cost? How will you find out? It's very challenging. Initially, this expert group led by the president and previous president and others also decided, okay, let us accept. I'm just sharing with you the journey and the experiences, the composite. Finally, we decided, no, let us go the scientific way, and we decided to component. We had a track management system. We drew the data from there. Similarly, we got a lot of challenges in a non-segregation lease and versus owned assets. Our 80% lease assets are, we have got more than 3 lakhs crores of loans from the Indian Railway Finance Corporations. So we had to segregate the various types of rolling stock, which are, and we also finance from our own internal resources or from the earlier gross budgetary support. This thing, how to segregate. There were again challenges. During our journey, we also realized many records we don't have. In fact, like few land record, we thought and many record we found the pre-partition. Many assets were as old as pre-partition, and they were in Lahore. Now, how do you arrive to this thing? No way we can get a record. So we have to arrive. We decided that we'll just identify the assets physically available with us. We put a nominal value of ₹1, token value, just to ensure integrity of data, is not compromised. Then data of CWIP, data of inventory, data of investment, non-availability of old records. It was huge challenges. Any organization, whether who is going to go for these transmissions or migrations, are going to have the same problems. Data validity, authenticity, then date of asset discard, and other linkages. These are the physical sound. More than that, the resistance to change, management support. You have to take the people together. They are all the challenges what we face in the data collection. About key features, when we were able to complete first time, it took about quite some time. And then when we started, the first ever accrual-based balance sheet was created in the ministry in the history of the government of India. It was a proud moment for all of us. Based on the accounting policy finalized after a study of national, international practices and accounting standard. In fact, at that time we debated because many, as I explained to you, challenges. So this Ministry of Railway and ICAI used to refer to what are practices being adopted by other sectors also. What are the practices being adopted by shipping or aviations or other countries like other railways, maybe US, maybe China, maybe Australia, maybe New Zealand, who are already adopted, or maybe in India, say like what Delhi Metro, how they are doing, or say like Konkan Railway, which is a corporation. So we saw all the things. We also took a clue from GAZAP, this Government Accounting and Standard Advisory Board. They came out with the GAZAP 6, GAZAP 1, 2, 3, 4, 5, 6. We studied each and everything. Also saw the Ind AS, also saw IFSAS and other details, whatever we could gather. And finally, this expert body lay down and say that these are practical, feasible things which can be our accounting policy. In process, we identified 70 lakh fixed assets and light items, and we categorized and fallen in the 18 class. Of course, it was a massive IT-based also platform we had to create for them. As on 31st March 2015. Friends, as I explained to you, when you go for transition, the records were not available, or this information about cost was not available. So we didn't want to put any hazard on the valuation or estimation and put any guess number. We thought we will no compromise the integrity of data. We'll put a nominal value of ₹1 on non-availability data relating to cost and date of acquisition, etc., which incidentally included 93,000 of buildings, 81,000 of bridges, just to name two, just to see the types of problems we face. Now I'm taking to the actual numbers, how the journey started and how it's revealing and how it can lead to the better transparency, better decision making. So this is the typical asset size. 36% of fixed assets, 21% CWIP. Earlier, the fixed assets and CWIP was combined. You could not really bifurcate and see whether what is the real CWIP. I could only see my fixed assets is converted in 47%, or say like 57%. But now I can clearly say my fixed assets is 36%, 21% CWIP. So I have to concentrate on a CWIP to see the projects are completed in time, and I can convert them into the FAR, and I can start reaping the benefit of the what investment I'm making, whether there is a time overrun, whether there is a cost overrun, what steps are required to be taken. These are the things which can help me in taking the managerial decision. My current assets and loan and advance is 18%. That was is there, and Indian Railway funds, and which is on a asset side. Similarly, on a liability side, largely it's about 72% of various equity and funds, and then financial lease obligations, non-current liabilities and non-current liabilities. Non-current liability primarily on deposits and provident funds, and other current liabilities, employee benefit payable, expense payable, and advance income. Clearer picture now. The fixed assets, this green one, if you can see on your screen or tablets or whatever the medium you're using, is basically on accrual based, and this orange one is in cash based. The fixed assets, when I'm talking about, it consists of the CWIP is not included, so it looks much larger, and when CWIP on accrual basis is segregated in a green, the third bar you see, it becomes clear. So my FAR, I can see in correct perspective what is my real fixed asset and what is my works in hand or works in progress. Similarly, lease liability, which was not available in my cash base, I can see here what is my lease liability clearly, and what is my CWIP again deposit. These are large number. These are all figures in thousands of crore rupees. When I also this slide I made it to pick a clearer picture. What are the features in accrual based fixed asset register and block account? Block is actually my system capturing the data in a cash accounting. As I again and again keep on saying, my cash accounting existing system of government is very robust. There is no doubt about this thing we are following. But what are the features which are available here and which are not available there, and how do we compare? Fixed assets, of course, is captured both in fixed asset register of the accrual system as well as block account of the existing, which is cash based system. But lease assets is captured in the accrual based fixed asset system, which is not really captured in the block account for the reasons I've already explained earlier. As per capital works in progress, I explained to you, is captured in both investment side FAR and accrual systems, but block account system is there. It's a typical there. Amount spent from ABR, extra budgetary resources, is captured in accrual based system, not in accounting, because like accounting, whatever receipt, payment or spent or something is captured, not otherwise. And my store suspense WMS, which are typical to Indian Railways, are in my existing system, not in a accrual based system. Finally, when we made a second year final balance sheet on 31st March 2017, this picture gives the block. I've created two blocks. One is the accrual based block, second is the block cash based block, and broadly try to, for the sake of audience, for the ease of audience understanding, I give both the concept and the actual number. So on left side is the existing system, on right side is the accrual system. So on left side there is actually three circles. One is the block account plus residual capital value of lease assets, primarily lease assets which are captured here, and then amount spent for ABR. If I compare all these three, it gives certain figure. And right hand side, fixed asset register plus investment plus the stores WMS, this thing. So there is obviously some difference. Whenever I make a different system, it cannot match all the things. But difference is so meager, is more than only 5,635 crore, about a 1 billion USD or less than 1 US billion D. So 1.16% of the block account. It gives us some picture. Now, just like same thing, if you see the exact numbers, it gives the FAR why this differences come through. This fixed assets, gross accruing investment based on accrual basis and existing system, you can see capital works and see 1,99,000 huge amount. When it's help in managerial decision, help in transparency, help in expediting my progress of the works. Investment, loans and advances, and total similarly lease assets and 1,21,000 massive amount. I know my liability which I have to pay, which normally in my cash accounting I'm not really in that manner capturing. I do by and large, but not directly capturing. And net assets without lease and accumulated depreciation per se. Similarly, for profit and loss account, our policies also laid down how to capture what will be differentiation, because very typical for Indian Railways, when we move the passengers and the freight. Now, passenger may book a ticket 120 days before, but our journey may start on any particular day. So it was decided after studying various policies, any journey which starts before 31st March, our accounts is on 31st March. So journey started before 31st March shall be taken the earning of that particular year. Otherwise, it will be of the subsequent year. And our freight side, typically it was decided ki last 4 days, that is 29, 28, 29, 30th and 31st March of 4 days, whatever traffic throughput is there, which is being carried, 2/3 will be taken of that year and 1/3 will be of next year. This was done after due deliberation, a lot of empirical studies, empirical data, and from computer-based systems study. These were the accounting policy. It was laid down by expert group, based on which we decided this figures gave total revenue both on a accrual based and cash. Total revenue, working expenses, depreciation and difference, profit. Now, if really speaking on cash base, which was giving me the figure of profit, operating profit, if I provide entire depreciation of the thing, it give me the negative. It was ceased to be a profit for that particular year for various reasons. I'm only giving the facts and figures, friends. The same, if you go in a detail, how revenue from operations, it gives you further detailing. Sundry from other income, total revenue, working expenses, depreciation, how it led to the profit and loss, and what were the various pictures. One very interesting I would like to share. The first time, I don't know any other organization done. Commercial organization, of course, is obligated to do the actuarial liability, and they are supposed to take the difference in their balance sheet. We never did this exercise. We had to engage one professional body. It was again a very massive, because like he had to capture the live data of all more than 1.2 million employees, their entire profile, entire salary, also to take into account what is going to be the future scenario, and also retired, including say like our obligation toward the medical, including our pensions, and about our various other liabilities which are going to accrue. Now it's a very revealing, because you see the total actuarial liability on 31st March 2017 is mind-boggling, 10,65,000 crore. Gratuity itself is 71,000 crore. Leave encashment 21,000 crore. Pension on that basis was 8,76,000 crore. Composite transfer 2,08,000 crore. And retired employee liberalized health scheme, we spend a lot of money on the retired employee health scheme, will be about 93,000 crore rupees. Now I compare to my net worth of that particular year. Our total asset particular year was about 5,61,000 crore, and current and non-current liability after taking all together net worth was 3,69,000 crore. If we see, the net worth was 3.69 lakh crore. The actual liability itself is 10.65 lakh crore rupees. So these are glaring information which can be revealed if we really want to make the accrual based account, which can lead to the understanding where do we stand and what can be organization do. Finally, we did, when we came to all the things, we had a lot of knowledge share with the outcome, just like I'm sharing my all information with you and my journey and what benefit we are arriving and what information were revealed. This accrual-based financial statement were released in February 19. It was actually, this project was mentioned in 3 budget speeches by Honorable FM, and our commitment was made on, it will be first time completed in 31st March 2019, and we did in February 2019. And financial statement was shared with the CAG, GAZA, PMO, and all concerned stakeholders. And presentation was also made to GAZA, CNAG, and MOF. And we organized a national seminar also on this thing in Vigyan Bhavan. And finally, we had made reference to what should be the next course. Our key learning, what has been the key learning? Key learning has been actuarial based study done for the first time, which I just shared. There can be massive liability if really want to take into account. Then construction of fixed assets register based on the asset class. Again, it really taught us a lot. 70 lakhs assets, how to capture, how do you classify, what can be assets class, what are the challenges, 18, and whether it's a component or composite accounting you'll do, and how will you capture, what is IT platform you require. It's a very, very massive. It was very revealing and very information. In fact, still we are reaping the benefit when we want to do on this FAR. Then depreciation on the front, useful life. Many assets when it was not prescribed, we had a very robust our code system where like assets life is prescribed. Filling with like few assets we thought is not this thing, then we had to go back and then work it out. Recognize the capital works in progress. I mentioned to you earlier, it was directly as soon as any payment on the capex was made, it was booked to the and shown as a FAR. Then we bifurcated actual FAR which is ready and put to use, and a CWIP right now. So this first time, and I gave you the number also. Identification and recognition lease liability, my lease liability which I have already taken into account, and identification and recognition of liabilities and other assets. These are my key learnings from this whole project, which I would like to share. We also thought it should be sustainable project. So to have that thing, we did a lot of training for TOT, and large number of, in addition to webinars and seminars, we did 3 days programs. ICAI ARF did organize on behalf of us 12 training program for 3 days, which tried to cover various general railways and various employees who are going to do, and more than 600 people were trained to capture. Now, proposed scheme, what we are going to do, we are trying to move toward transaction-based accounting. From
Salecha sir, we have a time constraint.
Okay. So I'll just lead through. I will not go in further detail. So these are the things, and these are way forward. We are moving toward transaction-based and IT platforms and migration to this thing. And these are the various publications we made. Thank you very much.
Thank you, Saleja ji, and it was excellent presentation, and the entire journey with a huge giant-sized administration. And after following case-based accounting for so many years, in just 3 years you achieved accrual system of accounting with total training and sustainability. So it's a great journey and great learning for all of us. May I now invite Mr. Yan to share his views on experience of UK government in implementing accrual-based accounting.
So thank you. Can I just check you can hear me okay? You can hear me okay?
Yeah, we can hear you.
Okay, that's good. So good afternoon, everyone. I'm very pleased to be able to join you. I'm really joining you, I suppose, in two capacities today. I chair the International Public Sector Accounting Standards Board, as I have done since 2016. But in terms of sharing my experience with you today, it's in my earlier career as a Treasury civil servant for 10 years during the transition from cash to accrual, where I led the implementation of consolidated accounts for the whole of the public sector. Before I move on to that, just perhaps a little bit about the International Public Sector Accounting Standards Board. We're an independent board responsible for setting standards for public sector entities around the world. And by that I mean federal, central government, local government, state, and other organisations operating within the public sector on a non-profit basis. The board is mainly volunteer, other than myself as executive chair, and I'm loaned for 3/4 of my time from CIPFA for that purpose, so hence the two hats, if you like, today. We have independent governance and oversight arrangements. The independent governance comes from the Public Interest Committee, comprising World Bank, IMF, OECD and ICAI. We are based out of Canada, relatively small secretariat of 8, and so far we have produced 37 Ipsos on accrual basis, also the cash basis standard, which is a stepping stone to accrual, and then we also have voluntary guidance, recommended practice guidelines on things like long-term financial sustainability, and also our own conceptual framework. So that's our suite of standards. In terms of the reference to its usage around the world, which Dr. Kumar referred to, the 2018 survey by the International Federation of Accountants and CIP for the Chartered Institute of Public Finance and Accountancy showed at that stage 25% of governments were on accrual, and you can see India there on one of the 30% on cash. But it also showed that very big change that we're in the middle of, with a move to 65% reporting on accrual, and that's movement happening around the world, not only in Asia, but also in Africa and Latin America in particular. And as part of that, you'll also see a change in the role and influence of international public sector accounting standards. Some of the earlier movers in terms of accrual adoption, Australia has been mentioned earlier on today, but also New Zealand in those days, used their own standards and frameworks, as did my own jurisdiction, the UK. So at the moment, or in 2018, you actually had only about a half of the government either using Ipsos directly or indirectly through an endorsement process, or using the standards in some way. That will change by 2023, with a significant number then using the standards either directly, 31 governments projected, or through an endorsement process, 14 governments there, and increasingly governments like, for example, the Government of Canada starting to use these standards as a reference point for their own processes. So a very big change that we're going through. Now, if I move back then to the UK picture, what I want to do is cover that process, really thinking about 3 key aspects: phasing the transition in terms of coverage and both entities and types of transactions, how to manage a large accrual program, and we've just heard the example of the Indian Railways very large program there. And then also, how do you actually get the benefits of that? And that really picks up on some of the things that Dr. Kumar was talking about there, in terms of not only structural, but also how you change culture being very important in that respect. I want to make reference to some of the IPSASB literature here, and we have a thing called Study 14, which gives high-level views on how to make the transition to accrual generally, as well as some supplementary material related to specific standards. And one of the things that does is it looks at the success factors, in particular time periods, as I've referenced here. And you can see distinct categories: short, and you know, you need strong political support, relatively few entities, and good funding if you're going to make a transition in that sort of time frame. And you can see, for example, the Kingdom of Saudi Arabia is one of the current examples that is making a very rapid transition, and that has very strong central support for that. At the other end of the spectrum, you can have a very long accruals reform period, more than 6 years. What that tends to do is actually elongate process, and there's a strong risk that the process will actually stall or even fail because of the reform fatigue. And more generally, a sort of time frame of 4 to 6 years for maybe each of the different phases is common. And I'll talk to you about the fact that the UK probably fell into both the medium and long-term categories and the problems that we found with a longer implementation. So in terms of the transition in the UK, it actually happened at an entity level over quite a long period, with public corporations preparing accounts on a normal commercial basis, local government originally on a partial accrual basis, and then introducing capital accounting during the 90s. Similarly, the NHS providers, when they were set up, actually was set up on an accrual basis in terms of their accounting. So it's very much central government that was the last to move, and that's quite common when you look at governments around the world. You know, that sort of pattern with public corporations on commercial accounting, often now IFRS, of course, and local governments on accrual. Central government on cash. And the last thing that happened in the UK was consolidation, and that created practical problems and accounting policy problems because that was never actually originally envisaged. So very much a piecemeal adoption originally. In terms of central government in the UK, policy consideration for a couple of years before the policy was actually adopted in 1996, and then a transition period through to the first what we called dry run accounts, so practice accounts which weren't the formal sets of accounts, but nevertheless the departments had to go through that process of preparing accounts, and that was a very important learning process, which I think you know is important to the success of implementation. Then you had the first accrual accounts published, and then a transition through to the first accrual budget. So you needed the accrual information from the accounts in order to be able to set budgets. And then with budgets, we also moved in 2 phases. So the information on depreciation and provisions was not originally good enough in terms of quality. And that meant that we moved in 2 stages from a partial accrual budgets, excluding those 2 items, to full accrual budgets for 2003, 2004. And that is one of the very clear learning processes, that the information quality won't be right first time. It will improve gradually over a period. In terms of whole of government accounts, we built coverage across the public sector in 2 stages. Originally, we did what we called central government accounts, and that was probably for around about 250 bodies, central government departments, and independent agencies working within central governments, non-departmental public bodies as they're called in the UK, and also the devolved governments. And the purpose of that was really to implement the consolidation system, to develop the processes, charts of accounts, and also the accounts, as I'll talk about in a minute, for the new areas covered by the consolidated accounts. Having developed those central processes, we then expanded the coverage to include local authorities, NHS trusts and public corporations, so the whole of the public sector, and that is still a unique, I think there's only one other country that I know of that does a complete public sector consolidation like that, which is a much smaller country, Estonia. The original intention was to publish the first sets of accounts for 2005-06. Once we started planning in detail, we realised it was going to take longer, so we aimed for 2006-07. But as we got closer and as some of the figures began to emerge from the dry run, pension liabilities in particular, the politicians' desire to publish the accounts was perhaps less. And so it actually took a change of government to get the 2009-10 accounts finally published. Now, I referred to building the coverage in terms of types of transactions. If you think about local governments and public corporations and so on, you'll tend to have both income and expenditure in those sets of accounts. You'll also have debtors and creditors and property, plant and equipment. When you go to consolidation, what you introduce then is the whole of the central tax system. In the UK, that's personal and corporate taxes, also sales tax. You also bring in the central debt and reserves of government, and importantly, in terms of the way that pensions work for the UK, that brings in the main big central government pension schemes for civil servants, teachers, health service workers and so on, and that's really where the large liabilities come in. Now, thinking then about success features, going back to the IPSASB Study 14, very clear mandate, central political support are important. Legislation, I think, is very important. That was referred to earlier, and certainly it very much helps to have a clear, if you like, stick and clear legislation to urge people to actually deliver. You need the right project management structure. I'll talk about that in a moment, and I'll also talk about some learning from systems in a moment. And then you have the whole change area around human resources. So talking about leadership for the programme, I led a small project team within the Treasury. We also had one for the transition to accrual accounting and budgeting in individual departments. The composition of that team changed over time. Originally, it was very much around developing accounting policies, less around practical implementation. That changed as we moved towards implementation. We had responsibility for getting the policy, full policy approval, and the legislation designed and implemented. There are 3 sections which provide the enabling legislation in the Government Resources and Accounts Act 2000. And we were responsible for managing the programme, developing the guidance, monitoring implementation, and also addressing issues as they emerged. And a lot of our time was actually spent in both training and also communicating with stakeholders, both from individual entities right up to Parliament itself. In terms of systems, there's a big choice to be made there. And when you move to accrual, the question is, do you go for a centralised system or do you go for individual systems in departments? Because of the piecemeal approach that we adopted in the UK, we actually ended up not mandating systems at departmental levels, and that caused problems then when you try and bring it together. So potentially you could look at a more centralised system as, for example, Malaysia is implementing at the moment. You then get into challenges in terms of, you know, do you specify that it has to handle cash as well as accrual? If you try and do both, that certainly adds to the complexity. In terms of systems, again, consequence of the piecemeal approach that we adopted was that we had no clear standards centrally, and we also had no standard chart of accounts. And I certainly believe that a clear and unified chart of accounts is one of the key success factors. Managing the programme is also going to be one of the challenges that you face. You know, we had what was originally, we estimated about 1,500 bodies. Actually, that's developed as a lot more education bodies have been created. It's not to be underestimated the fact that you're going to have to implement this consolidation from scratch, so people won't have done it before. You'll get resistance, you need to train people, things won't happen immediately. So you will get, as we had, data submission rates building gradually. People won't necessarily adhere to deadlines first time round. So you need to you need to allow time for that. And then the really big issue that we found, which has continued to be a problem, is actually just the sheer number of transactions and balances that you do have across government. That's large. Unless you have a very strong central agreement process, that will create problems. And indeed, the UK Whole of Government Accounts was qualified on that basis for a number of years. In terms of the frameworks, as I mentioned, the legislative framework that we have, actually it mandates in the UK IFRS adapted where necessary for the public sector. Essentially, that's the same process as IPSASB itself undertakes. So the UK is actually 95% compliant with IPSAS, both at central and local government level. In terms of realising the benefits that Dr. Kumar talked about, really it's all very well to have year-end accounts, but actually to really affect change and get the benefits, actually in terms of performance, you need to align that with your year-end accounts, and that actually makes a big difference. You need to plan for that though, because if you budget on a different basis from your accrual, you get a lot more complexity, and that's what we ended up with in the UK. What this pie chart shows is that we had 3 different frameworks for parliamentary estimates, for budgets, and for accruals accounts. And you can see that we ended up with items that were in budgets but not parliamentary estimates, items that were in estimates that were not in budgets, and items that were just in the accounts and neither in the budgets or estimates. So when you end up with that sort of process, that position, people don't know, well, what am I actually being held accountable for? What should I be managing? So we then had to go through a separate reform process to actually bring those different frameworks together and get the whole thing as lined up as possible. So I would say that is one of the learning processes. If you want to do that, be very clear you're going to need to go through that reform process. Looking then at skills, initially very much the accountants in government were backroom people, the conventional bean counters. We made the mistake because of implementing accrual on a piecemeal basis that training was done on a piecemeal basis with limited central guidance. We then had to build the profession as a whole within the government, we had to build a more centralised finance profession. It took a while to get the culture change through in terms of departments. We were late, I think, in implementing qualified chief financial officers. The last department was our defence department that had a board level CFO, qualified CFO in 2007, so 6 or 7 years after the first accrual accounts. And the need to coordinate, coordinate in terms of approaches to use of accrual information, coordination to training and implementation. All of those pay dividends, and it's taken a while, but we are getting there. Finally, a word about implementation. Obviously, the way in which accrual is implemented within individual departments will vary. Management structures vary, but the important thing is that if you're going to use accrual, it has to be a departmental, change program. It isn't enough for the accountants to change; the managers need to change as well. And that's where one of the tools that's been used in central government is the model that CIPFA produced, which analyses where financial management is in a department. It gives you priority areas for improvement and allows you to track progress over time, and also to benchmark. And those are the sorts of things that you need to identify. Have you got a systemic problem across government, or is it something going on in that department? So finally, if I leave you with the learning from our implementation in the UK, and I think transparency has improved. Regrettably, the public finances haven't, but at least we've been transparent about that. And I think, though within that, the quality of budgeting and the way in which financial information is used across departments has improved significantly during that period. You do need to allow time for a phased approach. There are a lot of changes involved. The numbers look very different, as you can see from the example of the Indian Railways, and you will need time for the reform. But I would say not too much. I think there's evidence that we had problems towards the end of the whole of government accounts implementation, just simply because the data wasn't getting published, it wasn't getting used for fiscal policy purposes, and people lose heart. So you need to demonstrate movement forwards. Typically that 4 to 6 years works, and you need a coordinated program. Really the benefits are delivered by actually really making this part of your public financial management framework, and that means changing culture as well as systems. And finally, this won't happen overnight. You know, it's taken a long while, I would say. You know, it's still happening within government. I think we've improved a lot over where we were, but it isn't just about the accountants supporting the change. It's about the whole organisation getting behind it and really using the information, even if, as occasionally happens, that information is inconvenient, but at least you then understand truly the full economic impact of the transactions that you're entering into, and you are accountable to that, to the public. And overall, that's what it's about. It's about spending money as effectively as possible. So those are the you know, the, if you like, the learning I take away from the UK implementation. Thank you.
Thank you, Ian. And it was really so good to know about the transition in UK. It was full-blown transition, and you rightly mentioned that medium-term approach is good, 4 to 6 years. Otherwise, in a long period, the entire project may go haywire. And the learning is very much clear that apart from political commitment, even the involvement of key officials, ownership to be taken by them is so important in implementing such a big project. But in the ultimate analysis, it helps improving transparency and public finance management. So in India, we have yet to cross many hurdles because many public sector organizations yet to fall within accrual system, and we'll take this lesson and move forward swiftly. Thank you so much. I invite Henning now to inform us and discuss about what could be the role of PAOs in implementing accrual accounting in government and public sector. Over to you, Henning.
Yeah, thank you very much, and thank you for inviting me to speak. As you say, you know, my name's Henning, and I work for the Institute of Chartered Accountants in England and Wales, ICAI, and it's a real privilege to take part, so thank you very much. So, as you also said, I'm covering the cash to accruals transition from the perspective of professional accountancy organisations, which I shall be referring to as PAO from now on. But just one point I'd just like to make, you know, as Ian mentioned in his presentation, the UK started, or, you know, for central government at least, the UK started this process of moving to accruals accounting in the 90s, which was actually before I joined the accounting profession. So I will be sharing my experiences of working for the Ministry of Finance, and funnily enough, I joined the Ministry of Finance to take part in the whole of government accounts team, and I was there for the 9-10 year end. So I joined in 2010, and I had the joys of getting the first ever version of whole of government accounts out of the door, and all the issues that Ian mentioned was a pleasant reminder of that time. But just another thing, you know, what I'd like to just say is, you know, working on accruals accounting never stops. You know, there are continuous developments. Just looking at the IPSAS, you know, they are developing pretty fast. So really, what is relevant for me, as a person that works with accruals accounting in ICAI, will also be relevant for those transitioning. So turning to the role of PAOs when government transitioned to from cash to accruals accounting, you know, first of all, I would just briefly like to reflect on some of the core objectives of PAOs. You know, what do they actually do before moving on onto the presentation? So key objectives are to create an infrastructure to train professional accountants. So that is an education function. But PAOs also play a key role in keeping up professional standards. That is something that we refer to as CPD, or continuous professional development. But they also play a wider role by acting in the public interest. And to me, you know, that means doing the right thing even when no one's looking. And this means doing the right thing for citizens as well as other stakeholders of government performance. This will include challenge as well as collaboration, but either way, you know, having a clear dialogue and the continuous dialogue is key. And there are two key facets to this. The first one being professionalism, and the second one is relevance. So coming back to professionalism. So PAOs need to ensure that their members uphold standards, and when they fail to do so, that suitable action is taken. So that means that PAOs need to set standards in ethics and governance, as well as a sort of technical curriculum. You need to set out clearly how you expect your members to behave. Quality assurance is another key function, and then linked to that is investigation and discipline. And now coming to relevance, so adding value, business partnering, judgment, professionalism, skepticism, these are all key qualities that qualified accountants bring to the table, and they are certainly also relevant for the public sector. And finally, you know, PAOs have a major role to play to ensure trust in the profession. Without trust, accountants will lose their relevance. So this brings me on to a broader point of looking at the differences between the public sector and the private sector. You know, how different are they? Sure, there are differences, fundamental ones, such as the public sector is generally not profit orientated. Okay, there are some entities that will seek to break even, and there are some that also operate on commercial terms. However, you know, this non-profit seeking element then also throws up major differences in certain transactions. These are the so-called non-exchange transactions. The terminology is due to change, but I'm sticking with it. And these are transactions that are not at arm's length. So you effectively give something away without getting anything in return. And these don't really exist in the private sector. And common examples include grants. So I've come across people who view the public sector as not being too different to the private sector. I personally don't share this view. So my personal view is that there are fundamental differences that warrant bespoke solutions and public sector specific guidance. You know, but why am I saying this? Well, it influences what the PAO should be offering its members regarding qualifications for starters. Should the exams to become a professional accountant, you know, should they include public sector specific modules, for example? But it also dictates how many resources the PAO will dedicate to the public sector versus the private sector. So ICAW has over 150,000 members, yet only a minority work directly or indirectly in the public sector. However, you know, influencing and helping the government achieve better financial reporting and transparency will improve scrutiny and decision making, and in return lead to better economic performance, which is in the interest of all. So that is why ICAW have a dedicated public sector team, which I am part of. So what I've just been talking about brings me to key role number one of a PAO: provide the infrastructure to create and nurture professional accountants. So a key transition effect of moving from cash to accruals will be the rise in complexity of systems, processes, analysis, and presentation. And all this requires expertise. My own experience of joining the Ministry of Finance, and I joined from Barclays Bank, was that a lot of people involved in the finance function were not actually professionally qualified. And that doesn't mean that they weren't good at their job. What I found was that you had a lot of long-serving people in the finance function who were good at their job by virtue of repetition, essentially. They were doing the same task for a long time. However, you know, adopting accruals accounting will break this tradition. And also then with key shock events such as COVID, staff will need to be flexible and have the ability to tackle new things. So this is why PAOs play a key role in providing the necessary infrastructure for accountants. So this covers things like the exam syllabus, support lines or helplines, ongoing training, events, seminars, you know, much like this one today, and workshops. So the upskilling of people is a key step to accounting reform. I also think more needs to be done to promote the public sector as an attractive place to work. Job security, interesting work, work-life balance is all well and good, but the public sector must also be able to compete, within reason at least, on pay and pensions, because if you don't, then the best simply won't come. In the short term, especially when transitioning to accruals, expertise will most probably need to be brought in via consultants. However, in the long run, government will need their own expertise in-house. And this has been a continuing focus in the UK. You know, Ian alluded to it. I think the UK could have done a better job, you know, earlier on to professionalize the workforce and bring in some of those sort of key accountants in decision-making roles, such as CFOs. Okay, so this brings me on to the next key role, and that's PAO as an enabler. A key comparative advantage PAOs have compared to other operators dealing with the public sector, such as the Big Four consultancies, is that they are neutral and can bring stakeholders together to act collectively for the common good. So neutral in the sense of not having any vested interests, and also in the sense of acting for the wider common good. When government transition from cash to accruals, there are many different stakeholders to bring on board. Key stakeholders to have closer relationships with are, in my opinion, the supreme audit institutions and key government departments such as the Ministry of Finance. The supreme audit institution will in many ways have the same objectives as the PAO. To ensure government is functioning as best it can, are transparent and act in the best interest of its citizens. Working together will be mutually beneficial in providing insight and driving up standards. Nurturing good relationships with key government departments is also fundamental. Whilst formal feedback and advice is often achieved via consultation responses, at times the best way to have an impact is by having direct, informal contact. So becoming a trusted partner and working together will achieve the best results. PAOs will have access to information that the government will generally find useful. For example, what is a private sector best practice and what are other governments doing? In Malaysia, for example, the Malaysian Institute of Accountants has nominated a technical staff to serve on the Government Accounting Standards Advisory Committee. And coming back to cash to accruals transitioning, learning from other countries who have recently done this journey will be a very valuable source of information. And the PAO can actively engage in this area, either by enabling contacts to be made or by researching the accruals adoption path of other countries themselves. IFAC and IPSAS-B have a number of case studies on their website, but these are short videos outlining some of the challenges from a range of countries. It's well worth having a look. The last key role PAOs have during the transition phase, and indeed beyond, is education. I raise this point in addition to providing a training infrastructure mentioned earlier, is that it is still an ongoing issue in the UK and could have and should have been handled a bit better following UK's transition to accruals accounting. Adopting accruals accounting requires a cultural shift, which won't happen overnight. I think a major role of any PAO is to be the #1 advocate of this transition. They should keep re-emphasizing the benefits, explaining these to people that may be skeptical. Too often, PAOs organize events, roundtables, workshops that preach to the converted. Often, the people that don't turn up to these events are the ones that need to be targeted. So senior government officials and politicians who will be using the information spring to mind. In the UK's whole of government accounts for 1819, which has actually only just been published, so 18 months after the balance sheet date, they have listed and explained in some detail examples of how the accruals data is being used. So for example, by implementing a thorough balance sheet review to ensure that assets are being used optimally and that liabilities are managed as effectively as possible. So using real examples to sell the virtues of accruals data and accruals-based accounts is a very good way of getting people on board. There are now plenty of good examples, perhaps none better than New Zealand's fiscal policy being largely influenced by their accruals-based balance sheet, which is something what they refer to as the country's net worth, and it's really fascinating stuff. It is also about educating wider society of the level of transparency and accountability they have the right to demand. If demand is there for information, be it from the citizens directly or from other stakeholders, such as government bond analysts, then the supply will eventually follow. And I think the PAO should help build up this demand. There are obviously further roles PAOs have, can assist in the transition to accruals and accounting. And I would just like to make people aware of that there are some excellent additional resources on CAPA's and IFAC's website. And finally, I would like to finish just with a quote from a distinguished economist, John Maynard Keynes. And the difficulty lies not so much in developing new ideas as in escaping from old ones. Thank you very much for listening. Thank you.
Thank you, Henning, for giving an overview of the role of PAOs. And you rightly mentioned that the CPD programs training quality assurances, POS have to play a big role while dealing with transition to accrual accounting in government sector, public sector. And you rightly mentioned that the professional skepticism and all those qualities which are required or expected of an accountant while serving a private sector enterprise would all be required in serving government or public sector enterprises. So let us try together. Even in India, we have a long way to go, and let us strive for a scenario where private and public sector enterprises would be following the same standards and will be totally comparable. And officers like Naresh Saklechaji, Rajiv Kumarji, who promised full commitment, will make it possible even in India. Let me thank Rajiv Kumarji, Nareshji, Ian and Henning for sparing their time and giving a lot of value add and inputs to the listeners and viewers. And let us work together for this culture change. You rightly mentioned that it is complete culture change, and therefore change takes time to be effective. So with lot of patience, we'll implement accrual accounting and move forward. Thank you so much. Thank you. Thank you.
Thank you, Jan. Thank you, Henning. Thank you very much for joining us and sparing your valuable time. Thank you very much.
Thank you.